Okay, so I think we are live, right, Rishabh?
Yes, sir, we are live.
Yeah, thank you. Thanks for bringing me live. Yeah. So, hello everyone. Trust all you are doing good, right? So, a few days back we have started our master classes, and till now we took two master classes of finance, right? First master class I took, and another master class was taken by Shailendra sir, right? So today is our third master class, and we have started time value of money concept in our master classes, right? So Shailendra sir, he taught you some topics or some concepts related to time value of money. Today I will be continuing the same, and I will be telling you, I will be revising everything what Shailendra sir and me have covered in past two lectures, right? And after that, we will be continuing with some cases, right? Because practical cases are very much important. So if you want to learn more about time value of money, so you should solve practical cases, right? So I will be taking some hypothetical cases, and I will be also taking real data based cases. So you will get them, you will understand the importance of time value of money, right? So just let me share the file, and I will be revising what Shalin sir has taught you and what I have covered in first lecture, right? So quickly I will be revising. So we have started time value of money concept. In first lecture, I have discussed about the basics. I have taught you that what you have to learn in finance, right? These things, what we have done, we have discussed till now. Now, today I will be revising what topic Shailendra sir he has covered. So he has started time value of money concept, right? He started with time value of money concept. And quickly, I will tell you that what actually is time value of money, right? So let's suppose what you are doing, you are planning to invest your money. Let's suppose you are doing a job and you are having 10 lakh rupees with you, right? You are having 10 lakh rupees with you, right? Now you are planning to invest this money in some business, right? So definitely what you will be doing, you will be trying to find out whether you should invest into this business or not, right? How you will find out whether you should invest into this business or not? On the basis of return, right? On the basis of return, you will decide whether you should invest into this business or not, right? So somebody is giving you information. Let's suppose you planned to invest in Zomato's share, right? You plan to invest in Zomato's share, right? Now, definitely, why you have invested into Zomato share? Because Zomato company will be profit-making company in future, right? How you have decided? On the basis of rumors you have decided. You have not done any analysis. What you have done on the basis of rumors, you have decided whether to invest into Zomato or not, right? So now, how you will be deciding? If being a finance guy, you should do analysis before investing your money, right? So these things we will be discussing. So let's suppose you are planning to buy Zomato share, right? So now what you will be doing, definitely you will be analyzing that what return Zomato will be giving you in future, right? So according to the return, you have to find out whether this Zomato's investment will be proper or not, it is feasible or not, right? So let's suppose you have invested 10 lakh rupees in Zomato, right? Now every year Zomato is giving you return, right? So on the basis of returns, what you will be doing, you will be deciding whether your investment is good or not, right? So here in time value of money concept, majorly what we will be learning, we will be learning about investment decision, right? We will be learning about investment decision, whether to invest in any business or not, right? This is the most important thing which you have to learn, right? Now, why we are discussing about time value of money, I will be showing you several cases that how you can solve the questions, right? So we have already seen how you will be calculating the present value, right? Just listen to me very carefully. I am taking one more example here for your better understanding. Now, let's suppose you are having 1 lakh rupees with you, right? You are having 1 lakh rupees with you, right? You are having 1 lakh rupees with you, right? Now you are planning to start a business. I will be taking small amounts here, so you will get better idea, right? How to solve cases, right? So first I will be starting with very small cases. I will say that you are having 10,000 or 1 lakh rupees with you. Now you are planning to start a business, right? So how you will do the decision making that which business you should start, right? So these things, what we will be doing, we will be discussing in detail right now, right? So you are having 1 lakh rupees with you, right? And if I'm asking you that how you will make the decision that which business you should start, right? So let's suppose you are having option to start chai ka business. Nowadays chai ka business is very famous. Or other option is that you can start vada pav ka business, right? You are having two options with you, right? You are having two options with you. Now which business you will be starting? Which business you will be starting? Is it chai ka business or is it vada pav ka business? How you will decide this thing that which business you should start, chai or vada pav ka business, right? So definitely what you have to do here, you have to do proper analysis, right? So let's suppose you will be starting this business for 5 years, right? Right now you have joined graduation and you have committed that till 5 years, unless you are completing your MBA or PGDM course, you will be doing this course, right? Pakke pakke se you will be doing this course, right? So for not course, this business, right? So for 5 years, you have planned that you will be starting any one of the business and you will be running this business, right? Now, you know how you will be making the decision that which business you should start, right? So definitely initially, if you see, you are having 1 lakh rupees with you, right? Now, first you will try to find out the profit, right? That how much profit you will be able to earn from this chai ka business, right? So this is your investment. You are investing 1 lakh rupees. Now, how you will decide that how much profit you will be able to earn, right? So let's suppose on day zero, sorry, at the end of year one, you have started your business on 1st April 2021, right? Now on 31st March 2022, you are able to earn profit of 20,000 rupees, right? This is your first year profit. And I am saying profit, not sales, right? How you will be calculating the profit? Profit is going to be sales minus cost. So your first year profit is how much? It is 20,000 rupees, right? Your second year profit is how much? That is 31st March 2023. Let's suppose your second year profit is 30,000, right? Your third year profit is, that is 31st March 2024. You have earned profit of 50,000 rupees, right? Here at the end of fourth year, that is 31st March 2025, you have earned profit of 35,000 rupees, right? And now at the end of fifth year, that is 31st March 2026, let's suppose you are earning profit of 40,000 rupees, right? This profit you will be earning, this much profit you will be earning from chai ka business, right? From chai ka business you will be earning this profit, right? Now you're planning, you are having two options. So if you are calculating or forecasting your profit from vada pav ka business, so how much profit you will be earning, right? So we will see this thing. So you have invested, you will be investing 1 lakh rupees into this business, that is on 1st April 2021. So on 31st March 2022, or at the end of this year, you will be earning 30,000 rupees in first year, right? In second year, you will be earning 20,000 rupees. That is 31st March 2023. In fourth year, you will be, in third year, you will be earning 35,000 rupees, right? And here it is 31st March 2024. That then on 31st March 2025, let's suppose you will be earning profit of 40,000 rupees. And here on 31st March 2026, how much profit you will be earning? You will be earning profit of 50,000 rupees from your vada pav ka business, right? Now, which business you should start? You are having two options. Option one is this, and option two is this, right? Now, which business you should start? You just see here which business you will be starting by, right? So what you will be doing, you will be saying, sir, that we have invested 1 lakh rupees. We will be investing 1 lakh rupees in any of the business. So what we will be doing, we will be checking that which business is giving us more profit, right? So this is your profit, the total we will be do. So 30 plus 20 plus 30, 50, 1 lakh, 1,35,000 and 1,75,000. So total return which you are getting from this chai ka business is 1,75,000, right? Here if you see 30 plus 20, 50, 50 plus 35, it is going to be 85, 85 plus 40 plus 90 is going to be 1,75,000. Oh. Now from both the businesses, you are generating return of 1,75,000. Your profit will be 1,75,000. Now, what you will decide that which business you start, right? So definitely you will say, sir, we can start any of the business. You can say that we can start any of the business because we are investing 1 lakh rupees right now, and in total we are able to generate profit of 1,75,000 rupees. So you will say, sir, any of the business we can start because there we are getting same return. I will say your answer is wrong. Why I'm saying your answer is wrong? How you can say that you can start any of the business without doing proper analysis? Now, if you see, you are earning these profits in future. When you are making the investment here on 1st April 2021, what you have done, you made investment of 1 lakh rupees, and you will be getting these profits in future, not in current year. You will be getting these profits in future. And this is not a peer comparison. Why this is not a peer comparison? Because here you are earning profit in future and you are investing money right now. So there is no peer comparison, right? Let's suppose if I'm asking you that just give me 1 lakh rupees today, right? I am asking you just give me 1 lakh rupees today, right? And I'm saying that after 5 years, I will return you 1 lakh rupees. I will return your 1 lakh rupees. So would you be giving 1 lakh rupees to me right now? No, definitely you will say, no, no, no. Why should I give you 1 lakh rupees if you're not giving me any return, right? Simply, you will be returning me 1 lakh rupees after 5 years. So definitely this 1 lakh rupees will depreciate in future. Why I'm saying this 1 lakh rupees will depreciate in future? Let's suppose I'm taking example here, right? Let's suppose there is a brand of iPhone, there is a series of iPhone, right? So right now you have to pay 1 lakh rupees to buy iPhone, right? You have to pay 1 lakh rupees to buy iPhone. That is today on 1st April 2022, right? Now, if I ask you that what amount you will be paying after 5 years if you are willing to buy iPhone, so definitely you won't be getting the iPhone at 1 lakh rupees. And I'm not talking about iPhone 13, iPhone 12, right? I'm talking about recent iPhone. So if I talk about recent iPhone, that is iPhone 13, so definitely you need to pay more than 1 lakh rupees. But I'm assuming here 1 lakh rupees. What I'm doing, I'm assuming here 1 lakh rupees. So you need to pay how much? You need to pay 1 lakh rupees right now. You need to pay 1 lakh rupees right now. In future, if you are willing to buy another series of iPhone, another number of iPhone, definitely you will be paying 2 lakh rupees. Around 2 lakh you have to pay. So the price of product will increase every year. So if you're not generating return from this phone, if you're not generating return from this phone, so definitely, just a moment, I'm getting a call. Okay, so guys, if you see here what we were discussing, we have seen that definitely the money will depreciate. Why I'm saying money will depreciate? Here, if you see, right here, if you see, let's suppose what you're doing, you are making investment. Let's suppose if I take example of 1st April 2022, you are having 1 lakh rupees with you, right? Why I'm saying the cost of product will increase in 5 years or every year? Because I think you have heard about the concept of inflation rate, and current inflation rate is around 7%, right? So every year inflation rate will increase, right? Every year this inflation rate will prevail, right? So today's inflation rate is 7%. Next year again inflation rate will be 7%, again 7%. So the product or the price of product will increase every year by 7%. So next year if you want to buy this iPhone, so you need to pay 1,07,000 rupees. Again next year if you want to buy this iPhone, so you need to add 7% more. So it will be around 1,15,000 rupees, right? So every year cost will increase. So if you are not able to generate return from your money, so definitely your money will depreciate, right? Here we are having future values with us. Here we are having future values with us, right? Now, if I want to do peer comparison, so what I have to do, I have to calculate the present value of these amounts, right? I have to calculate the present value of these amounts. Okay, because I will be calculating the present value of these amounts, right? Now, if I ask you that how you will be calculating the present value of these given amounts, right? So definitely what you have to do, you have to use the present value concept, right? First of all, what I will be doing, I will be telling you that how to calculate future value. I think you all know the simple interest concept and compounding interest concept, right? Let's suppose if I am giving you simple example here, right? You are having 1 lakh rupees with you, right? Now, what you're doing, you're depositing this money into the bank, right? You're depositing this money into the bank, right? Today, that is on 1st April 2021, right? You're depositing this money into the bank, that is on 1st April 2021, right? What amount you will be getting at the end of 31st March 2022? What amount you will be getting, right? So definitely you will say, sir, if we are getting interest of 5%, so we will be getting interest that is 5,000 rupees, and this money will become 1,05,000 rupees. The closing balance of your FD is going to be 1,05,000. Again, if I'm saying that you will be getting interest of 5%, so what amount you will be getting next year, 31st March 2023? You will say, sir, 5% on 1,05,000 rupees. If I calculate 5% on 1,05,000 rupees, so it is going to be how much? It is going to be 5,250. This is going to be interest. And what total amount you are getting here? Your total amount is going to be 1,10,250 rupees. Right? So this is your principal amount. Right? This is your principal amount. Right? So how we have calculated this 1,05,000. So instead of calculating this interest separately, what I can do, I can use this formula to calculate future value. And I'm calculating here future value. Why I'm saying future value? Because today I'm making investment and I'm thinking that what amount I will be getting after 1 year. And so I'm standing here right now. On 1st April 2020, I'm thinking what amount I will be getting. So this is the future value for first year. This is the future value for second year. Right? Now, what you will be doing here, you will be using this formula. That is principal, or you can say it as a present value also. This is the present value or current value. Principal into 1 plus rate. Right? So what is the rate here? Rate I took 5%. Rate I took 5%. Rate I took 5%. So 5%, I can write it like this also, 0.05. Right? So I will be taking here 1 plus rate. Formula is going to be 1 plus rate. Right? So here, what is the present value? Present value is 1 lakh into 1 plus rate is 0.05. So it will be 1.05. Right? So what value you will be getting if you are multiplying these values here? So you will be getting this value. Right? Here, if you want to find out next year value, right now you are standing on 1st April 2021. So what you have to do, you have to use the same formula, but what you are doing, you are forecasting 2 years later value, right? So here you have to apply n. So here n is going to be 1 only because we are calculating it for 1 year. Here formula will change and here you will be taking present value into 1 plus r power n. Right? So now n is going to be 2 because we are calculating value for year ending 2, that is 31st March 2023. So here it will be 1 lakh into 1.05 square I have to take, right? If I will do the square, so what answer I will be getting? 1 lakh into 1.05 per square. If I do 1.05 into 1.05, so that is 1.1025. So here if you multiply these values, so you will be getting the same answer. So how I'm calculating future value? By multiplying. Now if you want to calculate present value, so simply what you have to do, you have to follow the same method. But now what I'm doing here, I was forecasting future value, right? Now I have to use reverse method. Now I want to find out present value from the given future value, right? So I will be reversing this formula, right? So here, what formula we have used if I want to find out future value? So formula was future value is equal to present value into 1 plus r power n. This formula I was using. Now what I will be doing, I will be twisting this formula to calculate present value. So present value is going to be future value divided by 1 plus r power n, right? This is how you will be deciding, this is how you will be calculating the present value, right? Now, if you want to calculate present value for first year, right? If you want to calculate present value for first year, how you will be calculating the present value, right? So how you will be calculating the present value, here we will see, right? So 31st March 2021, 31st March 2023, right? So if I want to calculate present value of this 20,000 rupees, so what I will be doing, this is the future value. So what formula I will be using here? Future value is 20,000. I have to use this formula. You just focus here. Future value is 20,000, right? And here I am taking discounting rate 5%. Why I'm taking discounting rate, I will be discussing later on. So you have to take discounting rate. Rate is 5%, right? 20,000 divided by 1 plus r. So 1 plus r is going to be 1.05. So this time you have to divide, and power is going to be 1 because we are calculating this future value is for year 1, right? So 20,000 divided by 1.05 if you will be doing, so you will be getting here the value that is 19,047 rupees. Here value you will be getting that is 19,047 rupees, right? If you want to calculate the same thing for second year, so what you will be doing here, this is your future value that is 30,000. So you will be taking 30,000 divided by 1.05 per square, right? So you will be getting this value 1.1025 in denominator. So 30,000 divided by 1.1025, right? So what is the present value of 30,000 today? So the present value of 30,000 today is 27,210. The present value is 27,210. This is the value. Are you able to understand? This is the present value here. Is this concept? I think this concept is clear to you all. So every year, what we have to do, we have to calculate present value. So now I will be showing you this calculation in Excel in fraction of seconds. What you can do, you can calculate the values here, right? So I will be showing you just a moment. I will copy this data. So if you're planning to start chai ka business, so how you will be calculating the value here? So how much you have invested in chai ka business? So I will write down here. 1, 2, 3, 4, 5. It's a year. Then you will be writing down the amount here. So initially you are investing 1 lakh rupees, right? And how much return we are generating, we will check it. Right? So we are generating return 20, 30, 50, 35, 40. 20, 30, 50, 35, 40. 20, 30, 50, 35,000. 20, 30, 50, 35, 40. Here it is 35,000 and 40,000, right? This much return you are generating, right? Now, if I want to find out n here, n is going to be number of years. So here for first year, return n is going to be 1, it is going to be 2, it is going to be 3, it is going to be 4, right? So this is the n. Now what I will be doing, I will be calculating here present value factor, right? Why I'm calculating present value factor here, I will be explaining you. So I will be calculating here present value factor, right? So this is chai ka business we have discussed, and same I will be doing it for vada pav ka business, right? So I will be writing down the return here. So for vada pav ka business, right? How much you have invested 1 lakh, and here you will be generating different return. So I will check it. So it is 30, 20, 35, 40, 50, 30, 20, 35, 30, 20, 45, right? And 30, 50. Right? This much return you are able to generate from this business. Right? 1,75,000 from both. But here the numbers are not same every year. Right? So if you see what I will be doing now, I will be calculating the discounting factor. Right? I will be calculating the discounting factor or present value factor, you can say. Right? So what I will be doing here, if you see the formula, what formula I have mentioned here, you will see. Right here, I will see what formula we have mentioned here. So what was the formula? I am removing this data here. So for future value, what I have done, I have told you the formula, or I have taught you the formula. That future present value formula is future value divided by 1 plus r power n, right? Here, what is going to be the formula? If I want to divide this into two components, so how I will be doing it? So I can write it like this also. 1 divided by 1 plus r power n, right, into FV. And what I've done, instead of writing FV in numerator of this value, I've written 1, and I have written future value separately, right? So this is your present value factor. This is your present value factor, right? So what I'm doing, we are already having future value. What I have to do, I have to take 1 divided by 1 plus R. So to calculate present value factor. So how I will be calculating it here, you just see. So I'm calculating present value or discounting factor. So it was, what was the formula? 1 divided by 1 plus R. So R I have not written here. I will write down 5%. R is 5%. Rate is 5%. So it is going to be equal to 1 divided by 1 plus R I am taking here, and here power is going to be n, that is number of years. So I will be taking number of years. It is 1 for this value, right? So I will be freezing the R value. So I freeze the R value here, right? Now what I will do, I will copy these values here. So you can see automatically it will take number of years. Here, automatically it will take number of years, right? Same discounting factor I can calculate for second vada pav business, right? Now, if you see, we already are having future value with us, right? Now, if I want to calculate present value, so what is going to be the formula? Present value, future value into discounting factor. So I will take this value again. I'm showing you present value into discounting factor, and I will copy these values here, right? Here we don't have to calculate a discounting value for investment which you are making today, right? So there's no need of calculating discounting value. So I will write it directly here 1 lakh, right? Now I will see whether I am able to generate profit or not. So the total return which I am generating from business is how much? It is 1,49,000. This is the present value, right? So definitely we have invested how much? We have invested 1 lakh, and we are able to generate 1,49,586 from this business. So what is my net profit? We say it as a net present value, right? So my net profit is 49,586 rupees. Right? Same we have to do here, right? Here what I will be doing, I will be copying this 1 lakh rupees here. Right now we are already having discounting factor with us, so I will be selecting this value and I will be multiplying it with discounting factor, right? So if you see, I got these values, right? So here you can see, I will be doing the sum here. So if you see what answer we are getting, so here we are able to generate return of 49,442, and here we are able to generate return of 49,586. Now you just suggest me which business will be better. You just think it, right? So definitely which business will be better? This business is going to be better. Right? This business is going to be better. Why? Because if you see net result which you are getting from business from chai is higher than bada pav ka business, right? So this is how you will be calculating the returns, right? Pakke pakke se, this is how you have to calculate the returns, right? So this is what our present value concept, right? And whenever you will be valuing any business now, so definitely you will be using this present value concept every time, right? Every time you will be using this concept, right? Now, what is this discounting rate? I have taken 5% here. You might be thinking, sir, what is this 5%, right? This 5% is your expected return. This 5% is your expected return. Why I'm saying this is your expected return? You are starting a business and you are thinking that at least I would like to earn 5% return from my business. This is your expected return. You're thinking that at least I should earn 5% return from this business. So if you're expecting 5% return from this business, so definitely you should start this business. Definitely you should start this business because you are generating 49,000 rupees additional as compared to your expected return, right? So you're expecting 5% return. You are able to generate 49,000 rupees additionally, right? So let's suppose I will be making the changes in these values, right? And we will see what values we are getting here, right? So let's suppose if I'm making it 6%, if your expectation is increasing, right? You want to earn return of 6%. So if you see your profit will reduce, your NPV will reduce. Why? Because now your expectation is higher, and as compared to your expectation, you are able to generate 45,000 rupees additional, right? Here, if you see, you are generating total 1,45,000. So 1 lakh you have invested and 1,45,000 you are generating. So 1 lakh your return will adjust with your investment, and additionally you are generating 45,000 rupees, right? If your expectation is, let's suppose, 7%. So now if you see these values will decrease. Why these values are decreasing? Because your expectation are increased. You want more return. As compared to your this expectation, you are able to generate additional return of 40,930 rupees, right? If you are making it, let's suppose, 15%, right? It becomes 12,849. You want to earn 15% return, still you are able to generate 12,000 additional from your expected return. You should invest into this business, right? If your expectation is, let's suppose, 20%, right? You want to earn return of 20% from the business. You are having some opportunities with you, and you are already earning good profit from that opportunities, right? So now if your expectation is 20%, you are the owner, you are starting any business. So you will be deciding this thing, that how much return you want from your business, right? So if you are expecting higher return, right? So you have to write down 20% or whatever percentage of return you are expecting, right? So if you're expecting 20% return, so then this business is not suitable for you, because now your profit is in negative. So you should not start this business, right? So if you are expecting more return, now you will be getting negative returns, right? So you have to be mindful when you are starting any business. You should take the proper decisions. Is it clear? So if you're expecting 20%, definitely you should not start the business. Let's suppose here if I take 18%. So if you're expecting 18%, so you are able to generate 4,463. I will make minute changes here. If I'm expecting 19%, we will see you are able to generate how much profit? 1,877 rupees, right? If I'm taking, I want to make it 0. If I'm taking 19.2%, so here it becomes 1,370. If I'm taking 19.6%, right? Here it becomes 373, right? If I'm taking 19.8%, here it becomes -20. Here if I take 7, so almost you can see on an approx, if I'm taking 19.7 2 or 3, let's see 7 2 if I'm taking, so almost your return will become 0. If I'm taking here 4 5, yeah, so almost it is 0. 2.51 is almost 0, right? So if you are expecting return up to 19.750 business, right, 17 percentage, then definitely this business is best for you. If you are expecting higher return as compared to 17.75%, you should not invest into this business, right? So if your expectation is higher from 19.750 return, then you should not invest into this business, right? Now, you know, every time it is not possible. There is a concept of internal rate of return, which I will be discussing right now. Every time it is not possible for you to change the percentage and find out that which is the higher value which you can expect from a business, right? So here there's a concept of internal rate of return. I will be teaching you this concept. What internal rate of return talks about, it generally tells you the break-even point of business, right? At what percentage you won't be earning any return. So your total present value of return will become equal to this value, right? So if you do the total of your return, so if you do the total of your return, so your total of return is 1 lakh 2 rupees, right? Here you have invested 1 lakh rupees, right? So here 19.75 is the break even, right? You should not expect more than from 19.750 percentage, right? So there's a concept of IRR. IRR talks about the same things. It will help you to directly calculate this value without doing so much trial and error in your calculations, right? So if I apply this value, so it is IRR, open up the bracket, and if I'm selecting these values, and I have to select all the cash flows, whether it is in outflow, whether it is inflow. If I'm pressing here enter, so you can see here, so your IRR is how much? So IRR is 19.7510, which we have calculated by doing some small research here, right? By doing some trial and error, right? So your business should should not expect more than 19.75% return. If you're expecting more than 19.75% return, so you should not start this business, right? Here, what is your IRR? Here, your IRR is 19.7910%. Are you able to understand? So this is how you will be making the calculations, right? So guys, in next lecture, I will be taking more calculation and we will meet in next lecture. Thanks.